Good morning, Academy 55. David Kahn here on Thursday, the 3rd of July 2025. Looking at the EUR USD on the 1 minute time frame, following the Academy 55 indicators and strategy. Well, today could be it's 5 to 10 in the morning here in the UK. Today could, within our time together in this session, could be a non-event really, because of at 1:30 UK time this afternoon we have non-farm payroll, and usually the coming hours and all that we usually find even more sideways action coming up to that. So if you think of it logically, why would you want to go and invest big sums of money in the euro against the US dollar if you know that at 1:30 things could all dramatically change one way or the other? And sometimes that is indeed what happens. It takes 10 million dollars to move 1 pip of that you see on the chart is equivalent of 10 million pounds worth of investment from either multiple businesses or maybe a single conglomerate. Who knows? But the thing is, you just wouldn't want to do that, would you? So maybe we might see this going along this area here. If you notice this line here, if we draw a horizontal line just around, well, that area there, that is a key zone area, what we call a key zone area, which is a psychological area where investors and banks and all that like to take trades in, take trades out, collect orders, that sort of thing. It's nothing to do with price action. That is a psychological area. And funny enough, that's where we are right now. So maybe this area here is going to be significantly played out until at least 1:30, until our time, till non-farm payroll arrives. We don't know, but irrespective of that, what we'll do is we will have a look at the charts, take the indicators off, and we'll go on the daily time frame. There's that psychological level I drew out. And as we can see, we're the highest we've just here 3 days ago. We were the highest we've been. This level here is, which is only 25 pips away, is the highest the euro has been against the dollar since 2021. It's 4 years ago. So that's what we can see now. And we can see large swathes of imbalance on the daily candle down here, down here. These are all imbalance areas. And effectively, I've seen it before, effectively a non-farm payroll event could spike the whole lot of that to equalize that and then do what it wants to do after that. I've seen that happen before. It can effectively go 100 plus pips to take out that imbalance and then do what it wants to do. Not saying that's going to happen, but it has been known. Maybe not in today's climate, but that is what's capable of happening because the powers that be use price red alerts, high impact news to drive price. They disguise it. They drive price to where they want it to go to equalize the market and then go on. Not, like I said, I'm not saying that's going to happen, but indeed it could happen. So anyway, that's Looking at the daily time frame, yesterday was an indecision day, although the sellers were in charge a little bit, was trying to be in charge, but the buyers keep pushing them up, and we're playing along this line here, which we could be doing for some time yet. So we'll go down to the 4 hourly, and on the 4 hourly we can see a big area of consolidation. We got an imbalance candle here, but I can't see price going down there before non-farm payroll. And we got monthly imbalance here. I mean, will non-farm payroll want to drive a spike through that to equalize that monthly imbalance and then do what it wants to do? Could be, don't know. We trade what we see, not what we think. I'm just giving you different scenarios to think about. And anyway, so this is the 4 hourly time frame. So we're going to go down to the hourly, and we've got this key zone area where price is holding along this line. I'm going to put it onto the line chart. I don't go any lower than the hourly. And as you can see, that key area is also holding at 4 o'clock this morning. Sorry, yesterday morning. Just here is an area to look out for. If I put a horizontal line, we can see that we have one, nearly two, three touches there, four touches there. So this area, this 87-ish mark, yeah, that's more like it there. One touch, two touches there, touch there, and sort of a respect in there. So that area is an area to sort of look out for. So we're going to go take them off, and notice that we got imbalance down here. Now price could get down to these levels down here to mitigate this imbalance. So I think that could be happening, maybe. So we will draw that up. That candle there. And that is a buy FEG, not sell FEG. FEG just stands for fair gap value gap. So we'll turn that green. Just that bit of candle there. There's no selling power on that candle. No selling power on that candle. And that was taken out by that wick there. So that area there of that candle is got to be equalized. So that's why we draw that up. So we're going down to the 5 minute where the zones are, and we see that we have sell zone there and buy zone there and a sell zone up here. So that's the sell zone, that's the buy zone, all marked out for you. So if you're watching on YouTube, please bear in mind there is a short delay if anything happens. All the Academy 55 members with us get to be in the room if they want to be to see, and that response is almost instantaneous. Right, so I'm going to put the zones back on. Right, so we have a sell, but we know we got a buy zone there. So let's oh sorry, no, that's on the 5 minutes. Is it? exactly. We had the sell. Sorry, we're on the minute time frame now. That's why I don't usually put the indicator on till I'm on the minute time frame. Otherwise, mistakes could happen. But we're still on this sell here, and this is the buy zone. So is the sell petering out? And we'll be looking to take the next buy. And this would be the scenario for a buy would be a long position, minimum of 2 pips away, which would be 2.2 I like to do, which is there. The 2 to 1 would be up there. That of course is assuming all these turn green. And the parabolic is below, which is, but just here, again, we have the psychological area. So if we did take a buy, I'd be a little bit concerned about the fact that, yeah, we had buying power, and then it might get up there somewhere and just want to hang along this line like it's done there and over here. Lots of sideways movement, waiting for that non-farm payroll news. So that is the risks of trading, you see. If trading was easy, everybody would be doing it, and we'd all be millionaires, wouldn't we? So that's the part of that. I noticed we got a few new members for our Academy 55 membership. So what we're going to do is I'm going to play this now.
Hi, this is Steve with a very short video to show you where to get the training for the indicators and tools we use inside Academy 55. So once you're logged into the members area, you'll see in the premium dashboard this section that's entitled Start Learning. And if you click here, that'll take you through to the learning library. Now, we'll say at this point, we highly recommend you watch each of these videos 2 or 3 times to get a full understanding of how everything works. Here you'll find tutorials on using the MT4 Trade Assistant and how to use the MT4 platform with the Trade Assistant. This is the longest video you'll find inside the platform. It's around 30 minutes long, well worth your time. Watch the video once, then maybe write a few questions down that you might have for yourself, and watch the video for a second time, and things will really start to make sense. By the time you watch it 3 times, you'll fully understand how everything works. So that's the longest video. It's about 30 minutes long, well worth your time. And then you can jump into individual trainings here for how to remove indicators. These videos are just a couple of minutes long. How to move MetaTrader around like you can in TradingView, Trading Assistant controls, how to do back testing in TradingView, how to draw vertical lines to mark out your hour, and so much more. And by the time you watch this video or see this video, there might be other trainings in this section. But everything here is well worth your time, and you find that, as I said a moment ago, from the main dashboard in the Start Learning section. Now, one more thing just to mention here. If you're looking for anything in particular, if you come down to the support name of FAQs, click on Get Support, and in this area you'll find a detailed FAQ section, and you can come through here. For example, if you're looking for an answer to a question about MetaTrader, have a look through these, and once you click through you'll find direct links to videos that give you answers to most of the questions that we get asked on a regular basis. So hopefully you found this useful, and back to your further training.
Yeah, thanks very much, Steve. Excellent stuff. So we haven't missed anything. We're about leveling off again. So I'll bring that down again. this is where the stop loss will be in anticipation of the red wave turning to green. If it ever did for a buy, we've got to wait for that all important buy alert. And incidentally, that will be the next alert we get is a buy alert, because this is how it works. Sell, buy, sell, buy, sell. So the next alert will be a buy. So it's up to us to see whether it's worth taking that buy or not. And basically, if price goes in here first and then goes back up, our buy trade will be about a 75% success rate. But if you was to take a buy here, for example, I don't know whether it was a zone, because zones do paint and repaint, disappear and appear. But if this wasn't, this buy here wasn't in a previous buy, in the previous buy zone, this would be a 65% win rate. Still good, really good odds. And as you can see, that one would have won. Okay, so again, I'll mark that up for you. Long position. Everything was all green for you. 2.2 pips away. So you would have got in on the trend line, because the trend line is, well, you could have got in that one when the buy alert happened. So that large candle got in there quickly, 2.2 pips away, which would have taken your 2% up to there. And as you can see, that one won quite handsomely. Let's see if you have missed that long and waited for the next candle, so you would have got in there, which is a 3.3 pips away. Your 2 pips would be, your 2%, sorry, would be up there. And that is also good, as you can see. So even if you waited for the next candle on, by that alert, and that's the sort of thing that we do here at Academy 55. Right, so this is what we're looking at now. It all depends how many buy orders are in here. A stop loss is a buy order. So if somebody was to come along and put their stop loss, say here, for example, price might come down and take that stop loss out as a buy order before shooting on up. It all very much depends on how many buy orders there and stop losses there are here. Well, what move they make. They might not want to be too far away from this area here, for example, because of the non-farm payroll and other news that's going to be happening later on. So they might not wish to do that. The powers that be, I don't know. But it all depends on those circumstances, which we are not aware of. All we do is follow the fingerprints of what they are doing and act accordingly. But the experience tells you what they are capable of doing and why they do what they do. And that's a little bit of knowledge, and that equates to a bit of power. It gives you a little bit more of an insight to why price does what it does. So when you do enter into a trading situation, you understand sometimes when trades go against you, why it might go against you. And that knowledge will make you think, oh, well, a 1% loss or whatever it is. Obviously, this time of day, they're doing this, that, the other. So maybe best to come back at another time when the Academy 55 indicators and strategies suit. So now we're in the buy zone. So obviously a few traders or investors have actually put some orders down here. Is it going to go and bounce and break off this support and resistance line we drew up earlier on? It could well do. Or indeed, is it going to dip its toe into this imbalance that we drew up on the hourly? EUR USD, EU rebounds above $1.18 after breaking 9-day win streak. Jobs data looms. There we go, the jobs data. There's the 1.800 that I mentioned, that line there, the psychological level. And if I had to guess, I would say that they'll probably stick around here until 130, non-farm payroll. But I'm not going to stick my neck out because trading, if you do predictions like that, I've learned that trading has a way of making you look foolish if you say what's going to happen, which is what's really good about trading on the minute because we're reactionary. We're scalping, basically scalping. We're reactionary trading. But now we're well and truly into the buy zone. So now any buy now has a 75% win rate, which is good. So now it's the time to get my MT4 together. And I want to be 2.2 pips away. So I'll write in 22, put the line chart on. And make sure your risk to reward is in purple. Your lot calc is in purple. You've got that all important 1% in there. Again, we have videos in the back office done by Steve to learn how to use the trades assistant, and then you know how to set it up. And now all we do is wait. But like I say, 80% of the time we have sideways action. So we wouldn't be too surprised to see this going on. But is it going to this area up here, the 1.8? Actually, I think I might mark that out on my MT4 as well. Just there. Is the 1.8 area. Sorry, the 1.18000. I got a 1, but See if I could change that. No. Ah, no, sorry. It's good enough anyway. So, because that area there, if I was into a buy, that area there, I'll be worried about, is it going to bounce or break? I mean, luckily there was enough volume here for it to break, and in which case I could get my 2%, if indeed I was in a trade. But we'll see. We've got imbalances here, look, on this candle here. That little bit there is imbalance, and also imbalance here. So we've got short-term imbalance that price may consider equalizing, maybe. Or are they indeed concentrating on getting maybe yet more buy orders that are down here? No trading tomorrow, incidentally, because tomorrow is July the 4th. So anybody watching on YouTube, um, happy July the 4th day tomorrow. Hope you have a great day. But it's a bank holiday in the US. So because of that, the volume of anything that's happening in the market will be considerably a lot less. Because if you look at the eight main current Forex currencies that we use, the EUR, the USD, GBP, the yen, Canadian dollar, Australian dollar, New Zealand dollar, and the Swiss franc, all 8 of those in a, a pie chart like a pizza. The US takes 55% generally out of all that pie. So anything that happens in the US is a big deal to the rest of the Forex pairs, the Forex currencies. So if there's not much happening with the US, there ain't going to be much happening with the others. So therefore, the volume will be very low. And so that'll be like sideways movement is 80% of the time generally. Maybe it might be 95 to 99% of the time. So we give ourselves a day off and come back stronger the next week. If people are upset about that and think, oh, I want to go trading and all that, price don't care. Do what it's going to do, despite what you think. So you got to play your percentages in the time when you think things are going to happen. Anyway, so we're well away from this buy at the moment. So again, we'll move it over to trading view again. In actual fact, I think I might have time to do this one. Another excellent video by Steve.
Hi, this is Steve, and in this short video I'm going to just show you the settings for the Trade Assistant to make sure that you've got the minimum 2 pip stop loss on the Euro USD or any currency pair, and how you set it for if you're trading a commodity like the US 100, because the settings are slightly different. So here you can see we're on the Euro USD chart here. I've got my risk to reward on the Trade Assistant locked at 2 to 1. I've got my risk balance at 1%. Lot calculator is on, and my little purple button here between the buy and sell is also activated. So we're ready to bring the Trade Assistant onto the chart. Now you'll notice here that we've got the stop loss set at 20. That indicates 2 pips when you're on a currency pair. And we can actually change that here by typing over it. So if I type in there 40 and just tab off here, you can see now we've got a stop loss of 4 pips because we're on a currency pair. In this example, it's Euro USD, but it could be Euro GBP or any currency pair. So let's just put that back to 20 for our 2 pips. We'll click off here, and now we'll just put the lines on so that you can see that is showing us 2 pips over here on the actual tool, ready to actually get involved with a trade if that's what we were going to do. But that's not what we're here for now. I'm going to click off the lines here, and what we're going to do is we're going to change our chart from Euro USD to US 100, and I can do that by dragging it onto the screen here. You'll see it now switch over to US 100, and now you can see that stop loss says 20, and that's wrong for a commodity. So what we want to do here is come in here and type 2000. This is the equivalent of 2 pips on a commodity such as US 100. So now when I put the lines on, you'll see we've got the number 2000 here, and if I just zoom around, you'll notice the 2 to 1 still applies, 2000 and 4000 here, where we've got a $1,000 trade in place, risking $1,000 to win $2,000. So that's the number that you need to get your 2 pip minimum on. So the minimum number would be 2,000. You could have anything above that if you're on a commodity like US 100, and the number will be 20, which is 2 pips equivalent if you're on a currency pair such as Euro USD. Hopefully you found this useful, and thanks very much for watching.
Yes, thanks, Steve. So the whole, well, not the whole, I shouldn't say that, but one of the main points of Academy 55 is the fact that we keep, because you can make trading as difficult as you want. You can look for all sorts of indicators, Fibonacci's, harmonic scans, etc., which I've done in the past. But the main thing is to make a bit of money and scale it. So that's why we pick a very small monthly goal to go for. In my case, it's 10%. And so with that, you can pick the best probabilities of trading. I mean, we've only just started the month, so I've got plenty of time to wait for really good days when there's really good trades, when the market's moving a lot trendier than sideways. And there will be days and times of the day when it is like that. And that's when the Academy 55 will come into its own. I mean, I've had some trades where I've been in and out of a trade and got my 2% within 5 or 6 minutes. But consequently, I've had some trades where I've been in over an hour. You never know what the EUR USD or the US 100 is going to give you. We choose the EUR USD or the US 100 because of the way it interacts with the Academy 55 indicators, i.e. Nice smooth movement. US 100, when it goes, tends to trend, it really goes, and that's you got more opportunities to get really quick trades with the US 100. But when they go, they do go. That's why we choose the EUR USD and the US 100. And we do that also to keep trading for you guys really, really simple, because like I said before, you can make it really difficult if you wanted to. And it will take you a lot longer to become profitable because of the difficulty you have entered into. If that makes sense. And the whole idea of trading at the end of the day is to make money. This is the conundrum that I fell into when I first started, because I love the fact that analyzing the charts, looking at all these different indicators like your harmonic scans, your Fibonacci's, uh, support and resistance, and all that good stuff. Pitchforks. No, I'm not a farmer, but we've got an indicator there called a pitchfork and all that sort of stuff. And I used to love watching price coming up to those areas and then bouncing off like I thought it would do. And I got heavily involved in that. But at the same time, I wasn't making any money because I was trial and error so much because I was enjoying that part of it so much, the analysis, that really I forgot the whole. Well, I didn't forget completely, but that took over rather than the basis of trying to make money. That's what we're doing. So I took a step back, simplified it all, and this is what you see now after several years of experience and stuff like that. And keeping it really, really easy. No, sorry, not easy. Simple. If it was easy, everybody could do it. But and by keeping it really, really simple by a low target, you can copy these trades and scale up, not take more trades, not look for any more difficult trades to take, still take the same trades, but scale up by having two or three maybe different trades in one by copying them onto other devices and scaling up. But that's something we don't teach here at the Academy 55. What we're doing is we are teaching you how to pass a prop firm challenge, which I passed the prop firm challenge many, many times using what you're seeing here on the 1 minute time frame. And by doing that, you can use other people's money to rather than your own to trade with, and they give you 80% of the profit. And that's the whole basis of Academy 55, really. Keep it nice as simple as possible and as consistent as possible, and look for the best opportunities because we've got a low target to go for every month. And you'll scale that low target. You don't take more trades. You copy those trades, keeping the same format. Right. Anyway, so that's enough of that. So now, as you can see, we're well into the buy zone. We have indeed respected this support and resistance line that I drew up earlier on. And will we see this bounce off here and come and maybe go for up to this line here? Or indeed, it might go to this purple line now. This is the part of the indicator. This is the 462, which is a Fibonacci number that price respects, like it did there and there. Sort of respects this line as well. And there, look, and there. Respects this purple line. This is the average of 462 of these candles. And this is where price mainly hangs out as shown by the line. So will price want to go to here, bounce this and break? It might come up here and bounce, come back down again, and then break up to there, or it could bounce and then, do you know what? We've got some more buy orders down here. We'll come down and take those. We don't know. So this line here is pretty important as well. So nice to see so many people on today. I do hope you're having a great day and understand what's going on. Gaining experience all the time, of course. And the other important thing is to keep a journal. Now, Academy 55 members can take my journal in the back office, look at all the screenshots I've got, and all the screenshots are relevant because there is a video attached within the back office that you can actually see the trade of the screenshot being taken. We've got hundreds of them. But you can take that journal, make a copy of it, delete all the information, and make your own journal, which I hope everybody does. Because then you can journal your own journey. And then if you make a mistake or constantly make mistakes, you can go back over your trades over many days, weeks, or months even, and find out what maybe a bad habit you got into. Or maybe you look at trades where there is sideways movement and you're not waiting for it to trend as much as you thought it would. Or maybe the time of the day even that you're trading is not good for your the overall. So therefore, you can take a step back, re-examine, and all that good stuff. But it's nigh on impossible to do if you don't have a journal, because you can only remember so much. In the journal also, you can make a comment section where you can feel how you was mentally at when you took that trade. I mean, did you have a lack of sleep that night? Were you anxious about it? Were you not anxious about it, or whatever? And you could write that in comments as well. And all that's for you inside Academy 55. Let's see if there's any latest little bits of insight. No, not since we last looked. So now it's looking at around this area, the support and resistance line that I drew up earlier on. Maybe looking to break through that to go down to this area down here where the imbalance is. And indeed, it looks pretty much that way, doesn't it? In which case, we came far too late to the party for our sell. So, but we only need 1 or 2 trades a day. One trade, if you win your 2%, that is you done for the day. If you lose the first trade, you can take one more trade. And obviously, if it wins, you win 1% on the day. Because we only go after a 2% target, again, for simplicity and maintaining your mental integrity. So the second trade, if you win 2% on that trade, which means you are 1% up on the day, and then you walk away and leave it and then come back You reset the delete back to factory settings in your brain, and you come back again 24 hours time or whenever the next day and start all over again. I don't know whether it's going to be possible for us to obviously get a trade in because we're waiting for the next buy. And at the moment, it's hanging around, somebody taking orders, taking orders, taking orders. Are they buy or even more sell orders? We don't know. But they're taking orders, taking orders, taking orders. But we are kept out of all that. We are saving money, saving our equity. So, with that being said, what I'm going to do is I'm going to throw open the chat. So, if anybody's got any thing they would like to discuss about what they've seen this morning, nothing else, please. You're welcome. Morning, David. You posted a winning EUR trade yesterday afternoon, executed around 3:30. It appears when you look at you took the short, all the indicators were red, but the sell alert came visible slightly afterwards. Can you please explain are the buy alerts part of the trade rule? Yes, they are, but I I'm I can't remember, but I think I know what probably happened. Sometimes, well, a lot of the times, you have these alerts, they will paint on and they will disappear again. So, me in my anticipation, I saw it, the sell alert appear, and then price. So, if I was taking a sell alert appeared here, you'd get a sell, and then because price is doing that within a very short space, so that would disappear again. And then when price comes back down again, it would have paint itself. In other words, stay there then. So that's probably what happened. It appeared briefly for like 2 or 3 seconds and then disappeared because price action came back up again. That's probably what happened. I can't remember, so I can't say with any. But yeah. Anyway, we are now we've got a green volume ribbon here. The horizontal line is the volume ribbon is turning green. This the wave is just turning green, and this is where I want the stop loss to be ultimately if we do get a buy alert. So I've got two areas of interest to look at. This area here, if we do get into a buy, and this area here, where price could bounce or stall, or if there is enough volume, if they're taking enough orders, we might be going to the moon. Who knows? But probably not because of non-farm payroll, but we don't know. Anyway, I hope I answered that. Yeah, these especially on this is why we use TradingView as well, because MT4 can be a bit of a pain to try and draw diagrams and stuff like that. So that's why we don't do it on MT4. We use TradingView, and we got indicators for both, as you know. All the Academy 55 members know we got the same indicator for both MT4 and, well, MT4, MT5, and TradingView. And we show you how to install them and what they all do. But right now I was hoping maybe, see that candle there, that basically took out that imbalance on that candle there. That's why it did that. Is there enough volume to go out and do these imbalances up here? I certainly hope so. Then we may have a trade. Or are they busy still taking orders? Or are you going sideways? That's what they're doing. They're taking buy and sell orders. Hopefully there's enough buy orders to make the volume go right up, but we will see. And the indicator will point us in the right direction. So thanks very much for that question, Rob. We are in the buy zone. Let's go and have a look at TradingView very quickly. This is where we are at the minute. This is the buy zone. We are in the buy zone. And we're waiting for price to get up to these areas here. Stop loss in anticipation of the red wave turning green. And that will be nearest to the entry. Sometimes the trend line is above the wave. And if that was above the wave, that's where the stop loss would be. If the trend line was down, if that trend line was there, for example, the stop loss would be there because that is closer to the entry. But 8 out of 10 times, we find that the wave is usually the closest, but it's not always the case. It's whichever one of these is closest to the entry. That's the one we use. And it's usually the wave. Like I said, 8 out of 10 times it is. So am I going to get a trade in before 11 o'clock? That's the thing. I don't know. Price will do what it wants to do, as always. We haven't got any significant news at 11 o'clock. I can see. I use my FX book. I don't really want to drag it over because within a very, very short space of time, we could be in a trade, and I don't want to be looking at my FX book and miss a chance of taking a trade. So, but we use my FX book and Forex Factory. These are free online things that we use to look to see whether there is any red flag news coming up or what official news is around. Of course, there's always unofficial news, especially in today's climate. I mean, President Trump being very unpredictable anyway, you might say something bad about the dollar, and all of a sudden you'll find that the euro will climb to the highest it's ever been. depending on the strength of what he says, or he might say something good about the dollar, and then the euro will go down and down and down, stuff like that. And these things aren't written down, but the official stuff, you have to take note of the official stuff because that's all preordained. But we are just taking orders, taking orders. They have been doing for the last well, since there really several minutes. Not a bad day down here in Cornwall, UK. That's where I live on the southwest, down in the southwest. Hope it's nice wherever you are watching in the world. As you can tell, yeah, I'm running out of things to say now. My jokes are pretty bad, so I wouldn't inflict them on you. So as you can see, we are indeed they're pulling people out by this action. Other traders are coming in. Oh, it's going to go up. It's definitely going to go up. No, it's not definitely going to go up at all. We'll put a stop loss down here, and they'll go. Thank you very much. Come down and take that, and then either carry on down or do what they want to do. That's how they make their money. One of the ways in how they make their money. Several ways they make their money, but that's just one of their more productive ways of they have of making the money. And if you've got your money in a bank, there's a little, probably spotty little early 20s bloke sitting, looking at the charts. I'm not saying he uses this, but he's looking at his screen. Oh, yeah, make a lot of money today. And the bank goes, oh, thank you very much. He's obviously very good at his job, gives him a bit of a pay rise. And they use your money to trade with. And then they give you a measly like 1% a year or whatever it is for the privilege. That's how it works. No risk on your part though, so can have everything. Right, so now we see the profits are as above the price. Price has got to get, as of now, it's got to definitely get to there to push that profits are down. Then we have a buy alert, and all of a sudden we could be in a trade. Noting at 11 o'clock on the hour, sometimes more volume comes in. Sometimes it makes no difference whatsoever. But just be aware, 11 o'clock, there may be a bit of volume. But after all this, you haven't lost any money. And hopefully you've gained a bit of experience of what looking at the charts the way I look at the charts, the way I feel it should be looked at, and saving your equity. You're not losing money, waiting for the best probability, with the Academy 55 indicators and strategy. Because all of a sudden we could have liftoff, and sometimes it happens like that. So I've got to be on the ball, so to speak. I'm 2.2 pips away. SL22, that's 2.2. Now I do that because sometimes if you go just 2, sometimes that's not quite 1%. That's like 98, 97%, and that's a little bit less, depending on how rapid it goes up. Now the wave has turned green now. Oh, yeah, it's turned green there. The red wave turned green. So that's where I want my stop loss. But I won't do it just yet. It's too early. Maybe at 11 we might have a bit of a push up. Who knows? But we'll find out in a minute. Right, the parallel SR is down. This is where I want to lock my stop loss just underneath there. Now all we need now is a buy alert and we're in. But like yesterday, the buy alert might paint on, and if the price comes down a bit, it might disappear again and then come back again. And that's probably what happened yesterday with that question with Rob earlier on. But we haven't even got the alert yet, so we got the buy alert. Right, I'm in. I'm in the trade. I'm 3.7 pips away. Now the worry is here, look, price got to there and then it went down again. Sometimes historically things like that happen. And will it do it again? Still might come back down again and take me out. If it takes me out, it takes me out for 1%, no big deal. And as you notice, my 2% now is over the key zone area and over that area there. So this is a big hurdle for bounce or break. So is that one. But I've got to give it wriggle room. So I'm prepared to negate if price gets to this area here. I'm not going to be putting my stop loss to my entry for a break, for a risk free, because there's not enough wriggle room. I will do there, maybe, or I might be prepared to go all the way and just do and just prepared to take a 1% loss if indeed that's what happens. That's if we get to these heights. We might get a 1% loss right away. It happens. You get the best system in the world, nothing 100%. Give us it was 100%. Like I said, we'd all be millionaires. It's just crazy. But I hope my patience has paid off. So what I'm going to do now is we are at 11 o'clock. So I'm going to leave things the way they are, and we'll just see how this trade plays out. And I'm going to go on mute. And as I always say, I might even go downstairs. Well, I'm going to go downstairs and put the kettle on and make myself a cup of coffee. I've made my trade now. There's no point watching it. Anguish. No need for that. Whatever happens, happens. A 1% loss or a 2% gain. And that's the way I'm going to keep it. So I'm going to go on silent now. It's 11 o'clock here in the UK. Keep on watching. And I'll let it play out to whatever it's going to do. But with that being said, no trading tomorrow. So you guys have a great weekend. Nice day to make day tomorrow. And if you're watching in the US, happy 4th of July for tomorrow. And speak to you guys next week. But I'll go silent now and we'll see what happens. Speak to you later.